Okay, welcome everyone. Let me know that you can hear my voice and see the screen, the welcome screen, and then we'll get started. So type in, give me a heads up that you can hear me. And I'm assuming you can see the webcam. I'm not going to keep it on. I'm just saying hello. So give me a heads up. Thank you, Sander. Appreciate it. Welcome everybody to the Trap Trade Revealed, a brand new webinar, 10-minute trades. Schedule your trades. Okay, let's get started. So I've noticed over time and over the years that a lot of traders are afraid to trade the trap trade. That's what we see all the time. And there's really no reason to be afraid of the trap trade. So I'm going to go over all the ins and outs of it in this webinar, but I'm just going to do our usual, just let me give you a heads up to people that don't know what we do, just 5 minutes explaining what we do. So I'm Lee Goldstein, the trading director at 10-Minute Trades, and I'm the guy you deal with. I run the trade room, I'm the trade room moderator, and I'm pretty much your contact here at 10-Minute Trades. Please remember all the trades I discuss for educational purposes. I am not a financial advisor, okay? Keep that in mind, I'm not. We trade futures. We use the NinjaTrader platform, and people get very confused because we have earnings trades and we're not trading the stock, we're trading the futures. So keep that in mind. We trade futures and we use the NinjaTrader platform. And we have a system. Our system has software and 4 elements in total that make up the system. As a reminder, you can trade in a prop account, you can trade with a cash account. It's up to you, the way you want to do it. You can make your own choices with trading. Trading is very different today than it was years ago. Years ago, you traded in a cash account, and when you were ready, usually you weren't ready, but you thought you were ready, and you started to trade and you lost a bunch of money. Now you can lose the money in a prop account, and it doesn't really hurt nearly as much because it's not quite real money. Some people would argue that prop account is very similar to trading in cash. It's, in my opinion, it's not, but I'm in the minority. If you trade well enough, the idea is to take money out of the prop account, and people do it. But you've got to work, you've got to learn, you got to put some time in. There's no magic formula. There's no way around putting in the time, okay? Like I said, we have 4 elements that make up our system. And those elements are the weekly market movers, that's our weekly schedule, the daily market movers, which is our daily schedule, and then trade room access and the JOBB software. And we're rebranding our software NewsTrader Pro, okay? The WMM is the weekly schedule. The weekly schedule comes out every Sunday and has a lot of info on it. Even though there's not a lot of info on it, it still tells you a lot. It tells you the time of the event that we're trading. That's the trigger time. So if we were going to trade Chinese retail sales, that trade takes place at 9 p.m. Okay. Also, we show you the instrument we're going to be trading or the instruments. And it can be subject to change because this schedule is created many days before we finish with all our weekly testing. So sometimes there might be an update to the instrument we're trading. It's possible. So in trading, not everything is in stone to begin with. That's the truth. Everything is not in stone. You have to be flexible. You got to be able to move with the markets because the markets are always changing and setups can change and they can change at the last minute. It's possible. We also, on the weekly schedule, we try to be careful about letting you know that we have a DMM for that event. A DMM is a daily trade report, and not every report has a daily trade report, okay? And all our times are Eastern time, all right? Eastern time. That's where I live. That's what time matters to me. I make the schedule, so you got to figure out what time it is for you. And it's not that complicated. You can always go on the website and just type in, hey, what time is it? If it's 9 o'clock in Pennsylvania, it's very easy. Basically, you're going to be trading on your local time. That's the thing. All right. So keep that in mind. You're going to be trading on your local time. All right. The daily market mover is our second element. You got the weekly market mover, you've got the daily market mover. The daily market mover is a trade report. The day before the event takes place, we send our members the daily market mover. And of course, today's daily market mover sample is a trap trade. All right. And we're going to talk about the trap trade today and why people do get scared to trade them. I do understand. It's very easy to get scared when you trade because it's all about the fear of losing money. It scares people. So if you have a setup that sometimes leaves you naked in a trade or feeling like you don't have any clothes on, it can be scary. And the trap trade, it can make you feel like you're in the middle of the road with no clothes on. But you got to have faith in the system, and the clothes will show up. You'll be able to put them on, and you might even wind up with a tuxedo, if a tuxedo is your idea of a fancy bit of clothes. All right. The idea on the DMM is we have a yellow line. Whoops, the yellow line shows the setup, the recommended setup. Sometimes we change those setups in the room, usually not a lot, but enough to reflect the current markets. Sometimes the markets are so volatile when we get into the room that we wind up making some changes. Maybe the brackets will have to be bigger because the market's moving in such a powerful way. So those are things you want to be aware of. Nothing is in stone. That's why one of the most important things you can do if you're a member of 10-minute trades is be a trade room attendee. You want to come into the trade room as much as possible. First of all, it speeds up the learning process because it's much easier to watch somebody do something than to watch videos and go through the videos. It's time consuming. It's much easier to watch me set up the trades, talk about the setups, and then you learn to do it while you're doing it with me. That's the best way to learn. So I believe the trade room is the most important place to be. And then the fourth and most important element, really, they're all important, but without our software, where would we be? In a fast moving market, our software puts orders on the chart automatically. It puts the stops on the chart automatically. It puts our targets on the chart automatically. It can move the stop if we want it to. We can trail the stop. We can move the stop if we hit a target. Our software is essentially what I call a super ATM program. It's an automated trade manager. Instead of learning the program language of the trade manager that's built into NinjaTrader, all you have to do is type numbers into our software. It's a lot easier than learning the programming language in any platform. So, and it is a super ATM. It does similar things. It moves your targets. It moves your stops. It puts your brackets on. It handles most of the trade. Some trades you have to manage manually. That's just the nature of trading. You're not always going to hit all your targets and have everything work perfectly. Sometimes you got to manage the trade, and that's perfectly fine. Okay. So what actually triggers the types of trades that we trade? We trade market moving events. Many of them are specific news events. And there's three major categories that trigger these trades. High impact economic reports, like GDP, jobs reports, things of that sort, durable goods, retail sales. Category 2, earnings reports, as we all know. Category 3, market opens and closes, key times in the markets around the opens, around the closes, can be very good times to trade. And our software has news trading capability. It has discretionary trade capability. We have many different setups that our software supports. We support reversal trades, of course. The trap trade is a specialized reversal trade. We trade continuation. We have continuation trades. We have breakout trades. All sorts of trades, range trades. You could create a range based on time, and when the range gets broken, you can trade with our software, and you can automatically do a great portion of what we're talking about. There are lots of traders. It's very popular to trade the market after the first half hour. It's real easy to set up our software to create a range, a 30-minute range, and then when the range gets broken, we can trade that range. It gets broken and you get pulled into the market. So that's a popular way that we trade as well. And then you can just, if you want to, if you like looking at the markets for a special hour during the day, we have quite a few different discretionary ways that you can trade the market. And they're easy, but they're discretionary, but they use features of the ATM. So it's a discretionary trade with semi-automation is the way I look at it. Part of the trade can be automated. Your targets come on the chart automatically, the stops. You just might decide to enter in a discretionary manner. So I love our software. I mean, basically, it's been my personal development. In other words, I've been working on the software, adding features to it, working with the programmer since I got here. It's pretty much become my thing. I'm always adding features to it. Most of the time, I think I've done a pretty good job developing this software. And most people are definitely enjoying using it. It's not hard to use, and it unequivocally helps you to trade fast-moving events. That's the most important thing, that it helps. You don't want to fumble around trying to put brackets on a chart when the software can do it for you automatically most of the time, okay? So what is the trap trade, all right? When I got here, the trap trade was very different. We used to put our orders on the chart 40 seconds before the news, and we would adjust the orders all around support and resistance. And that's the way we would do a trap trade. But over time, the markets stopped allowing us the luxury of putting our orders on the chart 40 seconds in advance of a news event. All of a sudden, we noticed we're getting filled before the news comes out. We can't put our orders on the charts so early before a trade. So over time, we've modified the way that we trade the trap trade. And it's been a process, and it's been very, very good. Nowadays, most of the times when we trade a trap trade, We put our orders on just 5 seconds before the news, and we're ready to go. With a trap trade, the whole idea is we're expecting a reversal. That is the key to the whole trade. When we have a trap trade set up, it means we're not doing a breakout. It means that we have studied this event, and this event reverses way more than it doesn't. But the key to any trade that we set up is consistency. So it does a couple of things in a consistent manner. When the news comes out, it bursts, okay? You notice when news comes out, the instrument we're looking at has a pop or a drop. We want that pop or drop, we call that the spike, we want that to be relatively consistent. If it's 80 ticks one month, 10 ticks another month, 30 ticks another month, 150 ticks another month, it's not a good candidate for a steady, reliable trade. That would be considered an inconsistent report. If it changes so dramatically every time the news comes out, most probably we're not going to have a setup for that event. But the trap trade on every occasion is a trade that we expect to reverse. There's no two ifs, ands, or buts about it, if that's the statement, the saying. We expect a reversal, and if it doesn't reverse, we're probably not going to make any money, and we're probably going to lose money. Now, the funny thing about trading is you could have a report that is both a breakout and a trap trade. And that's okay. That happens enough that there are reports where when you get the DMM, there could be two setups on the DMM. One of them might be a trap trade. The other setup might be a breakout. And that's completely reasonable. And I'll explain why as we go along. So how do you find trap trades? How do you find any trade? There's only one way to find trades. It's not magic. First of all, you can come into the room and we'll tell you. All right. That's the easiest thing to do. In the beginning, members subscribe to our service. They come into our trade room and we tell you, this is a breakout. This is a trap trade. This is a range trade. We know because we've tested. Is it 1,000,000% that we're right? No. There might be instruments we didn't test on a certain event. It might be a breakout on that instrument. But in general, we do a lot of testing. We study these reports and we watch them and we record them and we see how much they move. And by back testing the most important events that you find on the calendars, that's how you pick the trades. With trap trades, we're looking for the ones that chop around the most, chop and reverse. Burst and reverse is the best. Burst and reverse, okay? We find them with the calendars, and every single webinar, I tell you what calendars to use. I'll tell you quickly today, we use forexfactory.com. We use investing.com. We use financialjuice.com. There's many of them. There's a lot of good calendars, and they all have systems where they show you what they believe are the most impactful trades. So as you get more experienced, you learn how to read the calendars. You learn how to use the playback feature in NinjaTrader. We had a webinar on that 2 weeks ago. Everything we do, we have education. We're teaching you how to use these tools. So when I drop dead, you'll be able to do this without me, because I'm not going to be here forever. And you want to be able to do this yourself. That's the key. Being able to do it yourself means you can practice, you can design your own trades. And it's, you know what? Maybe I'm crazy, but it's fun. I like doing it. So the keys to the trap trade. What are the keys? So first of all, let's look at a trap trade. All right, let's look at a trap trade. So yesterday we had an educational trade room. An educational trade room is a room where we know pretty certainly we're not going to trade the event, and we're going to teach about it. Maybe it's an event that just hasn't been really making us money. So we don't want to trade it. We want to teach about it. We want to watch it because maybe it's going to start moving it again. All right. It's going to start moving again in a way that's tradable. Most of them do. So let me show you. So we took I've been studying new home sales. Okay. And I told everyone in the room, I'm going to trade it. Even though this is an educational room, I'm going to trade it because the testing, it's still pretty good testing, but we never have had a DMM for the report. So it's never been one of our featured events. So it's never really been an event that made us significant amounts of money. But I've been looking at it for over a year, maybe longer. And as of the past year, the trap trade has started working on it. So I explained to everybody yesterday in the room, I'm going to trade it in my prop account. Like I said, you could trade prop, you could trade cash, whatever you want to trade. It's up to you. So let me show you the new home sale. It wound up being a very interesting trade for a couple of reasons. So let me get rid of. So new homes is at 10 o'clock and it's not on a certain day. It could be any day. So when I explained to everyone how I was trading it, we created our settings for the trap trade. And the settings aren't complicated. You type in the time, the orders go on the chart. We type in our stop, how many ticks, and we type in our tiers, T-I-E-R. What is a tier? All a tier is a bracket. It's an order. And it's just the way my boss designed this trade years ago. Instead of calling them brackets, which he probably should have done, it would have been easier, he called them tiers, and it's fine. So the trap trade has two tiers, two brackets, above the price and below the price. And we give each tier a value in ticks. So the new home sale, we trade gold because that's the instrument that responds the best to that report. And we have tiers of 10 ticks and 20 ticks, and we have a stop of 15 to 20, depending. So this is what that looks like right before the trade. 5 seconds before or right before the news is released. 5 seconds before the news is released, our orders are going to show up. Watch what I mean. Now, this was kind of an interesting trade because we got filled early. Right at the moment we were getting ready to trade this trade, Trump made an announcement about tariffs, and it made the gold market have an early move. And that doesn't happen all that often, but sometimes external news will create a movement in the instrument you're trading. The one thing about a trap trade, if it fills early, you don't panic, you just let it fill and you just trade it according to the way you were going to trade it. That's the rule. Just let it fill. If it was a breakout trade and it fills early, I sometimes will cancel a breakout trade because it now is a completely random trade and direction is not based on your setup. It's completely random. The trap trade's a little bit different because one of the things that is common to many trap trades are changes in direction, more than one. So if we get filled early, we might still get a very good change in direction to take advantage of. When the market changes direction, that's when we make our money, after the initial spike. So new homes, I'm going to let it run in normal speed first all the way through. So our orders show up right now. The chart's a little scrunched together. So as I'm widening it, I notice I'm filled. And it still makes me a little bit uncomfortable to get filled early. It's unnerving. I'd rather get filled when I'm supposed to be filled. The market went down, so it filled me long. I'm going in the opposite direction from the way the market moved. It shot down, filled me long, but the beauty of it all is it immediately put me into profit. Now it chopped around a bit, but ultimately it stays in profit except for a few seconds. Right now we're long, we're above our entry, which is this blue and green bar. I moved my stop to safety so that if the price hits my stop, I can't lose money on the trade. And it started moving up really nicely. And I started to trail it. I got too tight on the trail, which sometimes I do, and we got out of the trade for a $300 profit. It was still a very good trap trade. There's nothing wrong with making $300 on a trade, being in the market for less than 2 minutes. So the whole idea of this trade is that when the price went down, it put me in the market long, and I'm waiting to get my stop into an area of safety. Area of safety meaning above where I entered in a profitable position compared to where I entered. Sometimes you have to wait to have enough profit before you can get your stop to safety. Sometimes it doesn't fill both of the orders, the tiers, and you can't move your stop to safety because one of those orders is in the way. And I'll show you that, how you deal with that. It's very easy. When you enable a trap trade, NinjaTrader has the control panel up here on the right where my cursor is moving, up here on the right. That's the control panel. When you enable the trap trade by turning it on, by checking the box, that's when it puts your orders on. Sorry, that's when it puts the icon on to let you know the software is ready. And it also puts the buttons on above at the very top of the chart. It puts up a break even button, a close the trade button if you want to cancel the trade, an adjust button that we don't use much these days. That was a throwback to our old trap trades. And the all-important cancel button, the cancel outer tier button, okay? And then the combine orders button, which is another important button. When you enable the trap trade, those buttons appear at the top of your chart. Break even, again, is when you're profitable, you can move your stop to break even plus a tick by pressing that button. You don't have to fumble around on the chart moving orders or targets or whatever. You can do it automatically. It's nice. You always, when you're setting up a trap trade, want to see all the buttons. If you don't see the combine button, it means that your chart is just not wide enough. So you make it wider. The other thing that sometimes happens if you don't have your chart vertically positioned correctly, when the orders first come on the chart, they might be too scrunched together. Like that, you want to spread them apart so you can manage the trade, okay? That's the only reason I'm doing that. It's just so I can manage the trade, see all the orders, see the price movement, and manage the trade. So a very interesting thing is going to happen when you trade a trap trade. And let me put another one on, another one that also shows some things. So we answered some of your questions. What's a tier? The tier are the orders. 2 above the current price, 2 below the current price. If there's not a big enough move from the news, it might fill just one of the orders. If there's a really small move, it might not fill any of the orders, and we might cancel the trap trade. Nothing wrong with that. Sometimes we'll just cancel a trap trade. Let's, just for fun, let's look at our GDP trade from today. I told everyone in the room, GDP is a very risky report. It is because it's inconsistent over the years, but I was still going to trade it because it has a very nice opportunity for profit. It's just one of the reports that you must understand the risk. The risk is, the number of ticks you're trading, but on a trap trade in gold, the size of the trade we usually trade, we're risking somewhere between $600 and $700 possibly. If you get a full stop out, you don't shrink your stop out or try to get out early. That could happen on a trap trade that doesn't work. It's still, even though we had a trap trade that didn't work this week, it's not super common that we have trap trades that get full stop outs. It's not that common. And that's one of the beauties of the trap trade also. They don't stop out all that much. That doesn't always mean it's making a lot of money. They don't always make a lot of money if they don't stop out, but it's important to realize sometimes it's just not as big of a move as we want. So we don't make as much money as we'd like to, but it doesn't stop out either. And that's pretty common as well as a good trade. So today, GDP was the name of the game. And GDP is one of those interesting reports with two setups. One of the setups is an NQ setup that I don't like at all. Another one of the setups is our gold trap trade that we've been trading it for a very long time. It's a good question. If you're trading one tier, you always trade the outer tier only, because the only reason you would trade one tier is to reduce risk. Otherwise, there's no logical reason not to just trade the trade as you will. So it's not that one tier has an advantage. It's that if you're going to only trade one, it means you just want to reduce your risk by 50%. You're going to lose half as much if the trade doesn't work. And the way that you keep yourself as safe as possible is by trading the second tier. Now, there is a downside to that, but it's all up to you. There's no law that says you can't trade the inner tier as the only tier you trade. You can. But your zone of safety is much smaller. And we're going to talk about what the zone of safety is. No, it's not a Star Trek planet. It's a area based on our settings that we know how much the market has to move to destroy our zone of safety. And we know that before the trade. So the safest way to do a single tier trade is to trade the outer tier, probably accepting the fact that a no fill will happen commonly. We prefer that we would always get both tiers filled, but we also want to be safe. So sometimes the tiers are a little big because we want to be safe. Trading the inner tier, there's also no law that you can't increase the stop so that you might have a better chance of surviving if things don't go perfectly to plan. There's all sorts of things that you can adjust based on the way you trade the trap trade. So the tiers are your orders. The buttons, if your chart is properly wide, you'll see them all. And let me explain how you would try to manage a trap trade. So our software has this orange line. That orange line is the current price. All right, that's what that line is. When our orders go on the chart, we've got one order X ticks away from the current price, another order, X ticks away. Up temporary stop, because it's going to change. And then we have our bottom orders. When the price goes down, we're buying the market, we're going long. When the price goes up, we're selling the market, we're going short. Don't forget that, because otherwise you get really confused. You'll look over, you go, why am I long? I went up, or I went down. Why am I long? I went down. Why am I short? I went up. We expect a reversal. After the first move, we expect to make our money on the reversal, okay? The other thing about a trap trade is right now there's 4 orders on the chart because the trade hasn't been filled yet. Once you're filled, the opposite side orders, the side that isn't filled, now become your targets. So you want to possibly sometimes think about moving them. Sometimes they'll just be too big for a chance to get hit by the trade. And it's really experience that tells us that. And by watching the way that we trade it, it'll help you to determine whether you should move your targets or not. And you can also use support and resistance as places to put your targets. Because let's face it, what are the levels that are, we don't do a tremendous amount of technical support, but there are levels of support and resistance that do get touched very often, and they are good places to have orders to buy and orders to sell. So that's why support and resistance can be important, okay? Now, I will try to answer all questions when the webinar is over, all right? So again, you've got 2 orders above the market, 2 orders below the market. The current price is the orange arrow, so there's no surprise what the price is. And when the news comes out, it's either going to pop up or drop down. One thing that we like to try to do, unless testing tells us something different, generally after a news result, the price will go in a certain direction and it'll either hit our fill or it'll actually change direction. If it's a tiny change in direction and then it starts to go back in the original direction, that's fine. But if it's a pretty big change in direction and we don't get filled, then generally it's a trade you're not going to take. So follow me here. For instance, we're in this gold trade. We're trading GDP. The news comes out and gold goes all the way up, but doesn't fill the first target. And then it really does a fairly good size reversal. Doesn't fill the bottom target yet, but comes close. I would probably cancel that trap trade. And the reason for that, if it happened in 5 seconds, it wouldn't matter. I would let it just play out. But if we clearly saw a move in one direction that fails to fill, and then it changes direction, I'm probably not going to let it fill when it changes the direction, because that should have been our profit if our tiers were the right size to catch the first move. That's the key. I will sometimes, and it's not in stone, okay? There are some reports, they just chop around so much that you'll let them fill on either side while we're waiting to decide if we want to cancel a trade. Generally with a trap trade, most of them I'll give a minute or more before I make a decision to even cancel. When we test, we try to notate how long the fill took, and there's many trap trades where the fill might take more than a minute, and that's not abnormal, that's common. So don't be in a rush necessarily to cancel any trade. I would avoid, in general, using automatic cancellation. It's kind of something that we leave it on the DMM because a lot of people like using it. But once the pandemic hit, canceled trades really became much more rare. We just saw news release changing, and news came out more slowly. News didn't always come out the instant the results were out, and canceling too soon will make you miss a lot of good trades. Okay, so let's watch what happened this morning, and I'll explain this trade. So GDP was at 830. We also had core durable goods, Thursday jobless claims. Now you'll notice the price popped up and then it pulled back instantly, and I'm in a big profit before I even blink. Okay, that's what we love to see a trap trade do. Watch. The tiers are there. The price is going to shoot up, go through the first X, and then fail and drop. As it's dropping, I'm getting profit. So I'm immediately thinking, you got to be alert and awake. Immediately I'm thinking, I see it only filled one order. How am I going to get my stop to safety if that other tier is in the way? Watch. Watch what I mean. The news came out, the price dropped. All right, it chopped, but it dropped. If I want to move this stop, I'm short, so below my entry, so I can guarantee profit, that order's in the way. Cancel the tier with the button. Cancel the outer tier, press the button, watch. You'll see I'm going to do it. You watch. I'm watching to make sure the reversal took place. I canceled the button. Unfortunately, you couldn't see my cursor on that screen, but my cursor went right up to there, canceled the button. Then I was able to move my stop to safety. I then increased my target because I saw the price it looked like it was exploding down. And then I trailed. And I tried to trail in a way that, again, I increased my target. I thought good chance to hit the low of the day. That's what gold loves to do. We're nowhere near there yet. So I was trying to stay away from the bottom of the candle so I could keep trailing. Because remember now, I'm in safety, I'm making money. I can't lose a penny because my stop is in profit. If I get taken out of the trade, I'm being taken out in profit. So one of the reasons people are afraid to trade a trap trade is because if it hadn't yet reversed, price would be sitting up above, I would be sitting in a loss. And you feel like you're naked in the middle of the road when that happens. You think to yourself, oh no, it's never going to reverse. But we study this report. We study them. Most of the time, we're going to get our reversals. That's the beauty of the trap trade. Now, this trade pulled down a fair amount, and then I trailed. I probably got a little too close, but we made over $400 on that trade. We were in the market for about a minute. That's how a trap trade works. That was a perfect trap trade. Show it to you again because it was perfect. There was nothing wrong with it other than my trade management can always be better. Trade management is never the same by everyone, okay? It's never the same by everyone. It just isn't. Everybody manages differently. I was taught, don't turn a winner into a loser. Other people were taught, never move your stop. The stop is sacrosanct, all right? I believe don't turn a winner into a loser. And the perfect medium is somewhere in between. Some trades do better when you don't move the stop, and we notate that in our journal. Make sure every trade you trade that you have a journal. If you don't know how to record your trades, I'm going to show everybody today how to do it for free. You should always record your trades. At a minimum, you should keep a journal and write in your journal, what was the market like? What was the setup that you used? Did you make money? Did you lose money? What did you do wrong? What did you do right? Was there news that made things more difficult? Write what happened so that when you look it up, you can gain something from your experience, next week, a week later. So let's watch a perfect trap trade one more time. So let me just tell you what's going to happen. In a trap trade, a few seconds before the news comes out, usually 5, we put our orders on the chart. The news comes out and we expect some sort of a spike. We expect the spike to change direction. And on that change of direction, we start making a profit, and we immediately start looking at that change in direction to see if it's changed enough that we can get our stop to safety. If it hasn't filled both tiers, both orders, both brackets, then we use the cancel the outer tier button to cancel the tier that's in the way of moving the stop to safety. So at some point, you have that option. That's the anatomy of a regular trap trade. If you fill both tiers, then you don't have to worry about moving. You're going to be able to move your stop whenever you feel like it. So this particular trade, the news came out, had a very nice spike. It just wasn't quite big enough to hit our second order, and it pulled down. I watched for a little bit because I know reports can be choppy, but now I cancel the outer tier and I move my stop to safety. Now I'm also thinking, look, it's really looking like it's going to push down. I want to make my target bigger. I don't want to just let it hit my target before I have the opportunity to make my target better and bigger, okay? But I trail it as soon as I get the opportunity to trail. Then we looked at the charts again, realized, hey, look, there's a possibility gold's going to go test the low. Gold loves testing highs and lows. It loves it. Most instruments love testing highs and lows, and they often love it after news. We have a whole strategy called the magnet strategy. That's what it does. It trades the testing of highs and lows. So in this case, I tried to trail the best I could and maximize my profit, and probably got a little too close, which I usually do, but it's okay. We had a very nice profit on the trade, and that was an excellent trap trade. Now, the one thing I didn't talk about is what's really important. What is the zone of safety? I love that, the zone of safety. I love the way that sounds. Sounds fun. The zone of safety is the spike happens, and then we want to know how much can it spike and not burst through our stop and take us out of the trade. Now, the one thing I forgot to do for this webinar is show you a terrible trap trade that just blew through our stop. But trust me when I tell you, they happen. You get a trade, it doesn't reverse, it just keeps going, okay? You get a trade, it just keeps going. And this question I have to answer because I see it. So John asks, what strategy do you use to trade opens and closes? So the real truth is, John, I don't trade opens and closes, because if you want to trade the most inconsistent event known to man, it's the open and the close. But people are so attracted to them. I would probably lean more towards the close than I would the open. I'm not going to say I never trade them. We traded them for a year during the pandemic. But you got to be willing to really put up with a lot of inconsistency and they're very unenjoyable to trade because they're always changing. Sometimes you'll get a gap fill, sometimes it won't fill the gap. And there's so many different ways the open can be traded. It's very difficult to find a reliable setup. There are a few people that study it and spend a ton of time on it, and they do okay with it, and that's great. But for the average trader, it's very difficult because of the inconsistency. But there's other opens and closes that are a little bit more interesting. The gold open, for instance, it's not nearly as volatile as the market open. The oil open at 9 o'clock is very different than the market open. Individual instrument opens are a little bit more interesting, particularly on some of the commodities. So you could also look at trading around the open. See, I think what I like to do is trade magnets around the open. In other words, right before the open, often a high or a low will get tested. So it's a great time to trade a magnet. Often after the open, a high or a low or a VWAP will get tested. So it's a great time to trade magnets. After the news are also good times to trade magnets. So a lot of people think, you know what, if I don't trade the opens, I'm not going to have enough trades, but it's not true. There's so many other ways to trade the market that is safer and more rewarding, less difficult. So that's my personal feeling about the opens. I think the close is a little bit more manageable, but still can be tough. And it's definitely because of inconsistency. Some days you'll get a close that just goes in one direction. And it's just not enough of the same. So, and look, we have people that do it and they would probably argue with me that they're doing great doing it. And that's fine, but I challenge them to show me one instrument only and one setup that they're doing. That's not how they're doing it. They've got 4 different setups, 4 different instruments, and then you're always dealing with the issue, how do you pick? It's not easy. It's not easy. So I would find, me personally, I could find other ways to trade. Around the open is something to look at. What is the zone of safety? We kind of got off the track. So the zone of safety is when the market spikes. Our zone of safety is going to be tier 2 plus the stop. It's so easy. So when we set up a trade for our members to trade, like US retail news, for instance, very, very good trap trade, US retail news. So US retail news has a trap setup. It's a pretty big mover. Tier 1 is 55 ticks. That's also why a breakout could use. What if you have a zone of safety, right? And the zone of safety is target 2, tier 2, plus the stop. That's all it is. So our zone of safety on retail is if our tier is 70 and our stop is 25, it's 95 ticks. If the market moves 95 ticks or more, it'll stop us out. If it's under that, and there's a really good chance it will be, then we're within our zone of safety. Now, the zone of safety is not just a random number. It's not, we don't just say, okay, try 55 on retail sales. No, we've looked at least 3 or 4 in a row on retail sales. We look at trades for more than a year, but we will not make a change on a one-time event. 2 or 3 is required before we might change the tiers on a good setup. And it's only if the setup's not working. If occasionally you get a change in the way something moves, you don't run to make changes. but we create what we call a spike sheet. And all a spike sheet is keeping track how the market moved on each individual event. So we have a trade coming up tomorrow, the PCE price index. And it's a trap trade. One of the setups is a trap trade, and it's gotten really small. It only spiked 10 ticks in January, 8 ticks in December, 13 ticks in November, 18 ticks in October. You could see you got to go back to May to get over 30. So my goal would be to have a tier 1 that would get filled on most of these moves. So it's got to be pretty small. It's probably got to be around 10. And you don't want it so big that there's so much space between the two orders that you don't get a good average price, okay? But my second tier could be in the 20s, because when let's say it's 24 or 25, our stop is 20, so our zone of safety would be 25 plus 20, 45 ticks. There's not a single trade going back to you got to go back to April to have a trade that wouldn't have worked with those settings. So that's how we work on creating a spike sheet. And then the spike sheet shows us our zone of safety, because the zone of safety is tier 2 plus the stop. That's what it is. Tier 2 plus the stop. All right. That's our zone of safety. That's the trap trade. Now, who's got any questions about the trap trade? So we're really, the only time the trap trade is scary is if it goes up. Let me see if any of the ones that I have on sample here worked against us first. Let's see. We traded the FOMC statement with a trap trade. Everything, the trap trades have been working actually remarkably well. That one worked really well. Let me look at one more. Flash Manufacturing has a trap trade set up. And this is a tricky trade because it's a 9:45 in the morning trade. Let's see what happened this morning. Trading gold. We had a bond breakout and a gold trap. See, the charts were a little bit scrunched, so I spread them together. It was immediately another one that was an immediate profit. And it hit both tiers, so we were able to move it. The reason people get scared of the trap trade is when it fills you and doesn't go in the opposite direction. It keeps going against you. So you're sitting in a trade and you're watching the negative numbers increase. And people get scared because they're thinking, oh no, it's never going to reverse. What do I do now? This trade is never going to reverse. Sometimes that'll happen. What I like to do if a trade never reverses is I like to use the combine button. All right. Use the combine button. I'll try one more trade here and combine both the positions. If you're filled on 2 tiers, okay, you're filled on 2 tiers, another good one, unfortunately. Let's say you get filled on both orders. When you press the combine button, it moves the positions into one, and it puts you in the position that's closest to the current price. That just makes it easier to move your positions so that if you need to get out of the trade, you can move your targets as close to the price as possible if you get a small reverse. Sometimes when a trap trade fails, you get no reversal at all, and it just bursts and keeps going and hits your stop. Nothing you can do. It just sometimes happens. And then when they move very fast, as Sander is saying, you get confused because sometimes you're just not sure what's going on. But it's funny, what I find in most of the fast ones, most of the trap trades that move fast work in your favor. They're moving fast because they're whipping, right? And when a trap trade whips, it's usually giving you the opportunity to get a profit. So that's one good thing usually when they move very fast. And that's what I like. I like when it whips up and down. So if it doesn't reverse, I like to use the combine button, okay, to combine my orders into one to make it easier to move towards the current price if it ever starts to come back to me, so I can get out near break even if I get lucky enough and the trade changes its mind. Usually you can tell and you can sense when a trade isn't working, and you can know when to use that combine button. But when I trade a trap trade in the room, we try to talk through it so that everybody knows what to do as the trade is going on. All right. So 2 quick bonuses today. I want to give everybody a heads up. If you go and download the most current version of the software, you can load the newest version. There's a slight update to the software and everybody can get it. So in order to download the software, you need to log in. Everybody that's a member has website access to the software. And you can go to the website. Hang on, I'm sorry. Go to the website. Let me show you. And log in. And then when you go there, come on. It'll show you. You'll have access because I should have given you access. Right on the left, it says News Trader Software. Click on News Trader Software, download News Trader, and then now you've got all the software ready to go. Download a News Trader for NT8. So click that button. Click the download arrow. Don't worry about the files in the middle. Don't try to extract those files. Just download with the little arrow button and it'll put the file wherever your last file downloaded. That's where it's going to put the file. Wherever on your computer your last file was downloaded. Most often it's in the download folder. There's the file, all right? And then you're going to install it in NinjaTrader, all right? I didn't have my Ninja booted. Let me boot it. Give me a second. You're going to download it. And then when you have your NinjaTrader booted, two seconds. Here it comes. You're not going to try to extract those files, heaven forbid, no. We're going to import them into NinjaTrader. You're going to go to Tools, Import, NinjaScript add-on. It's going to open a dialog that looks like that. Just find the file you just downloaded and double click it, and it will automatically start to download. All right. So when you go to the website, there's 3 files you can download. Download the News Trader for NT8, download the Magnet, and download the Trap Trade for NT8. So you'll have 3 files, and you'll import them into the program, okay? You'll import them. And then after you're done importing them, make sure that you reboot the program. I personally would uninstall the software before I put new ones in. I would go Tools, remove NinjaScript Assembly, and then I do it. I'm such a fanatic. You can do all 3 at once. You can highlight all 3 if you're going to replace all 3, and then remove them. All right. And then I would reboot my Ninja before I install the next one, just because I'm a paranoid lunatic. When it comes to installing, I just have ADD. It's the only ADD I really have. But I would reboot the platform after I uninstall, and then I would install them one at a time. One at a time. There's a couple of new features. It's a new logo, and it's not a big update. It's very small. It has the shows less setups unless you press a button. It's not a mandatory update, but it does have the new logo. You'll know you're on the new software. If you download the software and your new logo doesn't show up, it doesn't work, then you want to go to your documents file. You know what? It's not going to be an issue. Nobody has this version, so let's just not worry about that. If you have any problems, just send a help message to help@10minutetrades.com. Help@10minutetrades.com. TJ, I think that there is a newer version of everything up there that I just put up yesterday. I think everything has updates. I would do it to all 3. All right. If you don't want to do it, you don't have to. I mean, that's the truth. You're okay. You've been trading fine with us. So, do it when you feel like doing it. I'm not going to make everybody do it. It'll give you the new logo, which is a cool logo. All right. And then if you want to record your own trades, everybody could do it for free. I've taught this at the last webinar also. All you have to do is get the snipping tool. All right. So go to your search bar and type snipping. And right click when it comes up app, snipping tool app, and paste it to your taskbar. All right. And the snipping tool, which is part of Windows, will now be on your taskbar. When you want to take a picture, you click the icon on the taskbar, and it has a camera. When it's on the camera, you click the plus, and then just outline by holding the left mouse button what you want to take a picture of. Then let the button up. Right click, save as, bingo. Just when you do the save as, do yourself a favor, put it in your download folder by clicking downloads. So it goes in your download folder. Otherwise, it goes in a crazy folder. You'll have to Google to find out where your pictures go because it's some random crazy folder. So when you make the save it as into your download folder, and then all the pictures going forward will go in that folder. When you want to do a recording, same process. Click the taskbar on the snipping tool. Just make sure you're on the video camera. Now when you press new, and if I just want to do particularly this window, hold down the left mouse button and draw the area you want to record, let it go, and now I could turn the mic on, okay? I can turn it off, turn the mic on if I want to record, but I just press start. And it counts down. It's now recording. When I'm done, just press stop. And now it's a good question. Where do I get the recording? I forgot. Let's see if I remember how to get, oh, okay. You turn the recording off by pressing the recording. So let me do that one more time. You can watch it down below. All right. So I was just moving the cursor. And you can save it. Also. And you can edit it in ClickChamp, which is Windows Editor. Okay. Now, let me try one thing. Okay, you can delay the recording also. So you press new. Let's say you're going to record this part of the screen. That was a picture because look where I was on. I was on the picture. So right click your save as. And then when you want to do the recorder, click, put it on video, press new, highlight the area, press start. All right, stop it, hit record when it's done, and then right click. I thought you could click right click. Maybe you have to save it. Oh, hit the disk. That'll save it. All right. If you hit this disk, that will save it. Recording. And again, save it into your download folder. So one more time on the recording, click snipping tool, new, hold down your mouse button to draw the area you're going to record, press start. You can turn off that. When you're done, you can just probably press record. Then you can save it by clicking the disk, save as, okay? Give it a name and your recording's recorded. That's how you could record your own trades. All right. Now let me go through all the questions. Anyone that has a question, please ask. I'll answer anything reasonable right now. So let me go through them. Bear with me, folks. Hold on, I'm just reading. Nasky, I don't understand what you're asking me about the clock. You don't know how to synchronize time? Answer that. You don't know how to synchronize time? If you don't, I'll tell you. Hang on. TJ, you asked about the single tier. We answered that. I show two CG charts, Nasky, because we were trading two different setups, using two different setups, two different charts, two different SIM accounts. From my statistical data, what is the percentage of wins versus losses? All you want to do, we look at each individual report, not all of them lumped together because we don't trade them all together for money. So we trade the reports that have either a good opportunity for profit or the ones that have been profiting on a regular basis. A regular basis would be better than 50-50. If a report is 50-50, I might trade it knowing that it could be 50-50 and I want to manage it to try and get the most profit out of it. But there are reports that are 4 out of 6 on a regular basis. Those are the ones we look towards trading live or with prop accounts. I don't know what you mean by do we rank the softwares, which one is best, and so on. We have family money trades. Those are the best of our best trades. Okay, zone of safety we defined. Sander, totally understand about the speed of the trades. No question that when a trade is fast, you want to just watch for a second. Try to watch for a second without panicking, and get your wits about you so you can figure out what happened. You can't trade properly unless you know what happened. If you're in a complete panic and you notice there's a nice fat profit in the money on your chart trader, hit the close button and get out of the trade. Understanding that when you hit the close button, you're going to get the worst fill. You'll always get a better fill if you try to manage your way out of the trade. Okay? I recommend don't panic if it gets fast. Just try to grab your wits about you, analyze carefully what happened. Syncing your computer couldn't be easier. You go to the website time.is. Time.is. Just go there. Type in time.is. It checks your computer to see if it's in sync. If your computer is not in sync, we have 2 programs in the file folder in the trade room that you can download. You get 2 of them. You can download both. One of them is called D4 Time. The other one is called PT Sync, Karen's Time Sync. When you install those programs on your computer, they give you a screen that looks something like this. I'm just putting my slides back up when I'm talking. The screen looks something like this when you need to put your computer in sync. They both look very similar. And all you do is press the Sync Now button, watching the synchronized line to see if it changes. And once it changes, which it did there, I just keep pressing the sync button till I see a change. Then I just go back to time.is. And 9 times out of 10, your computer will now be in sync. Okay? That's how you sync your computer. All right, everybody, I just want to give everyone the opportunity here. If you're not a member of 10-Minute Trades, this is an awesome time to be a member. Okay? Learn all that we've taught about appointment-based trading. You'll learn all about the software. You'll learn all about the daily market movers if you become a member. It's a lot of value for an unbelievable price. The Pro Trade Room is included. Everything that we do is included. Software, trade room, access. You can only take 1 trial. So if you took the trial before, please don't take it. Just send me a note and I'll send you a link at a very fair price where you can join with us and become a member right away. You get the trap trade, everything that we do. You can do it in a prop account. You can trade in a cash account, earnings with futures, family money trades, breakouts, magnet trades, range trades, everything we do in the trade room, you can take advantage of. Just go to www.gopro25.com. This offer expires tomorrow at midnight. There will be no trials honored after tomorrow at midnight. It'll take you to this website. It's $20.25. It's ridiculous. Okay. Lewis, definitely, I'll have a recording. It will get emailed to everybody that registered. You're here, so you'll get an email for sure. You registered, definitely. All right. Take the trial if you're not a member. If you're a member or you just took a trial, you know, there's a different link to join up for the correct price. All right. So very, very, very unbelievable deal to try it out if you're never with us before. Okay, just click the button. Easy as pie. and you get everything that we offer. I'm not a big sales guy, all right? Everything is explained in here. Some of it's actually goofed up because it's an old offer, but I'll make sure you get everything you need to get going. Send us your machine ID, right? And I'll send you a starting document to get you going, where to get the software, how to get started. We have a very nice document, okay? www.gopro25.com if you're not and never were a member. The updated, yeah, the software, I updated all the software on the website. Everything is updated now. It's definitely the newest version. Everything. And if you would prefer to get a PDF, I will put the PDF. You can't use the software unless you send us your machine ID, okay? So I'm gonna put the PDF in the handout in the webinar, if I can find it. So give me a second. I wanna make sure I send you the right file. This should be the right file. All you have to do is click on the links. You know what? I'm not going to put it in the, I want to make sure that, I wasn't prepared to do that today. The files are 100% on the website. I want to make sure, I don't want anybody getting the wrong file. So just go to the website. It's the easiest way to do it. It's $97 a month. It's $97 a month. Okay. Those 47 and 67 are just for the DMM reports only. No trade room, no software. No trade room, no software. Okay. So if you start at the beginning of March, you mean beginning of March, it's 97 a month when the trial expires. And it's not going up from there. That's the price. And it includes everything that we do. Whatever I emailed you is what I will honor for sure. Whatever I emailed you, okay? I will honor. I remember now. All right? Yeah, as long as you have the link, I'll honor it. Okay, everybody. Thank you for coming so much, and I'll see everybody, all members, I'll see you tomorrow morning in the trade room. Okay, everybody. Hope you have a great rest of your day.